The broadcast is now starting. All attendees are in listen-only mode.
Hey everyone, welcome to our special event about mastering moving averages. Great to have you with us, whether you're with us on GoToWebinar or our VectorVest YouTube channel. Great to have you with us. Really appreciate it for a Thursday night. We welcome you. Maybe you could just let me know that you can hear me okay, and if you can see my screen, just chat in. Maybe let me know where you're tuning in from and maybe your experience with moving averages, whether it's if you've got a lot of experience with moving averages, just type in a 5. And if you don't have very much experience with moving averages or you don't use them, just type in a 1. So Michael's kind of in between there. Michael W is kind of a 3. Michael V is a 5. So not totally experienced yet, but getting there. Yeah, so Mark is a 1, and everybody can hear me fine. We've got Bob from Austin in Texas. Great to have you with us. Peter from Barrie. Great to have you with us, Peter. Joe says likes to use the 500 and 200 day moving averages. That's awesome. We teach that in our Mastering Moving Averages course, and it's very helpful to define the trend or determine the trend. Bruce is kind of a 4 and Sam is a 3, so kind of in the middle there between knowing about them and maybe not using them as much. Sunul is a 1, so that's great. Kind of gives me an idea of where you are with your knowledge of moving averages, and really appreciate that. So I think we're all here, and again, I want to welcome everybody. Again, this is Stan Heller, consultant with VectorVest Canada. So I'll be your presenter, but we do have Mr. Jerry D'Ambrosio, our manager of educational content for VectorVest, in the background. So we're a smaller group tonight than we've been in the last 3 sessions. So I think we will definitely have time for your questions, and certainly encourage you to ask away as we go through. I'm actually very excited about today's webinar because moving averages is a technical tool that I use in my trading every day. And, I really believe that everyone should at least have a basic understanding of moving averages. Let me ask you this. How many of you, in addition to knowing about moving averages, actually have a strategy, a well-defined rules-based strategy around moving averages? Maybe just type in a 7 if you have a strategy that you actually use that has rules with moving averages and so on. So Viren says 7. Yeah. Michael says a 7 with scans, which is really good. So you're able to search for those moving average crossovers maybe. Dennis is a 5. Sunil, no, want to learn. So that's why Sunil is here for sure. Bob is a 4 on that one, so not quite up to the 7. Michael V is a 7. Mark is a 0. So Mark, this will be particular of interest to you, I think. And that's Mark E. And then we have Mark C is a 7. So definitely using moving averages, well defined with rules. So can be very helpful to your trading. I think a lot of us, if we have problems, if we're having issues, if we're asking ourselves, gee, should I buy this stock or should I sell this stock? That's telling me that we don't have actual rules, whether it's a moving average based rule or whatever our buy entry is or our sell entry. We actually don't have a rule. We're just kind of flying by the seat of our trousers. And a lot of analysts will tell you, and from their own experience, I'm sure, that an investor who's following a set of rules will almost always have better results than someone who is not following a rules-based trading system. Mark says, I've been using them blind, and yep, flying by the seat of my pants, he says. So, all right. Well, listen, let's get into it. I think you're going to enjoy today, and we are going to teach the TheemaSqueeze for you. Just give you all the rules and the details and a search that you can use. And by the way, we are recording the session, so you will get a copy of the recording. And if you stick with me to the end, we'll also put the slides into the handout section for you and put them on our VectorVest YouTube channel as well. So welcome to everyone on YouTube, Sherry and others. So great to have you with us. So for our go-to webinar, folks, if you have your chat box open, this is what it looks like. You can enter your questions here. Click on the send button when you've typed it all in. And then this should collapse on you to give you more screen space as we go through the webinar. And you can put your mouse at the top here, right at the top, and it'll form a crosshair, and then you can move it off to the side if it's not already there. And that'll give you more screen space if you're on a single monitor, for example. And then just left click on the orange arrow to open it back up to get the full chat box. And we did have an issue this morning with a couple of people that did lose sound. They weren't getting the sound for some reason. And if that happens to you, you may want to close out some tabs and then just log out and log back in is the surest way to get back into the webinar with sound. All right, but so far it looks like everybody's good. Everybody said loud and clear, Bruce and others, so we're ready to roll. So a key concept about moving averages at their real main purpose is to remove the noise and define the trend to help us predict or anticipate if the stock is going to continue to move in the direction that it's moving, whether that be up, down, or sideways. And of course, that will depend on the number of look back days that you have for your moving average. If you have a 5-day period look back, it'll be the average of those 5 days, and it'll give you some information, but maybe not as much as a 10-day moving average look back or 20 or 50 or 100-day moving average look back. So in today, what we're going to cover is 5 key ways that you can use moving averages. And we'll talk about and show you the exact complete trading system for the TheemaSqueeze swing trading strategy. And how many of you have heard about the TheemaSqueeze already? Maybe just give me a Y if you have and an N if you haven't. And what I'll be showing you is the complete trading system for the long strategy. In the course, we do teach the short side as well, but this will be the long side. So I see quite a few N's coming in, Suni and Viren. Bob is a no. Joe, who hasn't heard about it. Stephen M, not using it or not heard about it. Bruce, no. So a lot of no's. We've got a few yeses and recognize some of those names beside the yes. So we've got a mixture. A lot of folks will be brand new to that strategy. So we definitely will make sure we answer all your questions and give you the rules. And we'll look at some live charts as well as the slides where we've got some graphs with some markings to show the entry points and the exit points. All right, so that's great. So why are moving averages so important? Again, they just provide a simple means of smoothing that price action, making the trend and momentum more discernible. If you see the moving averages following up in a straight line up toward 2 o'clock, for example, that's a nice smooth upward trend. And when the trend picks up in momentum, it may actually get up to that 1 o'clock area and even 12 o'clock. And that is a very strong trend that maybe is going to have more difficulty staying at that level. It's kind of almost going parabolic. And we know what happens when a stock goes parabolic. Often there's kind of a climax top at the end before it comes crashing down in a pullback. So you've got to be a little bit aware of that. We teach that quite a bit in the course, how to be aware of those climax tops. So not only are moving averages a powerful technical tool on their own, but they also form the basis for other technical indicators such as Bollinger Bands, stochastics, and MACD. So, you know, if you're using moving averages, you're not alone. There's many retail traders, but also the pros are using moving averages either on their own or as part of these other technical studies. So a key concept, especially when we talk about a swing trading strategy like the EMA squeeze, is that traders with a short-term perspective tend to prefer the exponential moving averages. These EMAs move closer to price, so there's less lag. There's always going to be lag with the moving average because there's a look back period. They're not looking forward. Nobody has that crystal ball to look forward, but they're using a number of days in the period look back. And so it's always going to be a bit of a lag. But what we're looking to discover is the trend. And the earlier for a swing trader that you can determine the trend, the better. And that's why they like the EMA, the exponential moving average, which gives more weight to the most recent days in that look back period. We use MA for simple moving average. So if I say moving average, I really am talking about a simple moving average. And if I say EMA, it's the EMA. Okay. And so when we look down at the little mini graph below, you can see over at the left, when that big red candle comes into play, it's the EMA in green that reacts more quickly and starts to track price to the downside. The MA does follow along with a 13-day moving average, but it's slower. It doesn't react as quickly and it doesn't get as close to price as the EMA. And so here we see the crossover again where the price has been moving up. And once again, the EMA is the fastest to react and move up along with price. So when you're swing trading, short term, maybe 20 moving averages or fewer days, you might want to use the EMA. And for the longer term, the MA is just fine and works very well with the long-term moving averages. All right, any question about that? Sunil is asking what makes stocks to follow direction and can the moving average and EMA help? Yeah, we're trend followers in the VectorVest program. Whether it's the buy rating in VectorVest, we're following trends. In market timing, we're following trends. We can't predict what's absolutely going to happen, but when there's a trend and you see that moving average, in this case, turning up and following price, it helps us identify the direction. And typically, it's the institutional traders that really are giving us the momentum or trend more so than the retail investor. Sunil, I'm not sure if that was your question, but it's traders and investors that make the trend. It's supply and demand. It's buying and selling. And when retail investors and traders trade, usually it's 100 shares, maybe even less these days, or it might be 500 to 1,000 shares. And when a institutional trader or investor, I should say, needs to sell a position, it can be hundreds of thousands of shares. So they are driving that price change quite often. Does that help, Sunil? Oh, makes sense, he says. Okay, good. All right. There's 5 key ways that we teach in the moving average course. It really is a comprehensive course. And we teach 5 ways to use the moving averages. We can define and invest with the trend, whether that's up or down. We don't often trade when it's going sideways unless you're into option spreads, for example, but buying and selling stocks and ETFs, we want to know, is the trend up or is it down, and how strong is the trend? And we can determine how strong or weak the trend is by the slope of the moving average that we are using. And we will give you the ideal moving averages based on your sort of investment goals. We identify buy and sell signals using moving averages. We'll know when our setup is in place and when is the safest time to buy and when we need to consider selling. For example, in video number 2 on the Successful Investor course on the training tab, we talk about the 40-day moving average as an early warning sign in the VectorVest program. The trend is breaking down and prices cross below the 40-day moving average. We may not be a seller at that point, but the trend is not favorable and it's a warning. We determine broad market conditions. Is there more buying pressure or is the selling pressure overtaking the buyers? Is the market healthy and in an uptrend, or is it in a downtrend? So we look to those moving averages and their trends to help us make those decisions. And I talked about the slope of the moving averages, helping us determine how strong or weak the trend is. Is the stock near support or resistance? See if your stock is finding support in an uptrend or is it heading toward resistance. Great information to know. In VectorVest, we use the 40-day moving average. And when price is coming up to the 50-day or 40-day moving average from below, there's potential resistance overhead. But at the same time, if the stock price has fallen far below the 40-day moving average or the 50-day, then we know that there's possibility of reversion to the mean where price could start to come back up. So that's an important concept that we teach in the course. And is price extended? So quite often, I teach a lot of webinars and I ask people a lot of questions and we look at a lot of stocks. And one of the things we look at is where is price in relation to the moving average? If you're thinking about buying a stock, but the price is far above the 40-day or the 50-day or the 100-day moving average, it may not be the best time to buy. And why is that? Maybe I ask a question of you. Why would you not want to buy a stock where the price is extended far above a 40-day or 50-day, 100-day moving average? Anybody hazard a guess? Just to make sure you're still with me. I kind of have given it away a little bit. Yeah, Vernon says, well, it may not go higher. It may come back closer to the moving average. Yeah, Michael W. says it's overextended. And Roberta says there's possibly a correction coming. Bob says it's likely to return. And what Bob is saying there is you're likely to get a better price when it pulls back closer to the 40-day moving average or the 50-day. You're going to get a better price and get a bounce off of that support area of the moving average. Yeah, Bruce says you worry about those parabolic rise. When it goes up too fast, too far, pulls away from that moving average, it's parabolic and it's likely to come back. Mark says it's overextended, likely to meet up more with the moving average. If it's it's likely to come back down actually toward the moving average. Those are all great answers, so thank you for that. All right, so let's move on. Just when we look at predominant trends, I'm just going to give you a little bit of a clue or trigger here for identifying the trend using moving averages. And this is kind of a chart setup that I like, and I teach in the course on defining the trend. We have a short-term trend definition with the 3 EMA and the 8 EMA, green and red. So that's short term. And you'll see there's going to be more kind of whipsaws with crossovers than you will get with the longer term moving averages. The institutions quite often use a 50-day moving average. If price falls below the 50-day, typically 50-day moving average will give you support on an uptrending stock. But at some point, if it's hit that support area 3, 4, 5 times, at some point it's going to come below. And when it does, the institutions often step in and start buying to support a position that they already own. And some institutions will have rules that won't allow them to buy a stock that isn't above either the 100-day moving average or the 200-day. And I would say, and I know Jerry talked about this earlier today and yesterday, he doesn't like to buy a stock that isn't already above the 200-day moving average. That's this orange line, because your odds are much better when you're above the 200-day. You may get a pullback to these other moving averages, but you're clearly in an uptrend when price is above the 200-day. And so I just use a clock here when they're pointing toward that 2 o'clock. That's a nice orderly uptrend, not too swift, not too fast, in other words, and not too slow. It's just a nice, orderly, smooth uptrend, and that's what we need to be looking for. Whoops, boy, did I ever go back there, I guess. There we go. This is a predominant downtrend, and what you'll see with a predominant downtrend where the 200-day, the 100-day, and the 50-day in blue, they're all really pointing down toward 4 o'clock. The uptrends will happen in that space, but they're not nearly going to be as many or long-lived. So for example, here's one and we got stuck at the 50-day at the left here. Here we got another one, but we couldn't barely get above the 50-day. Here we got one that actually broke above the 100-day, but as soon as we got to the 200, it found resistance. So yes, you could have made some money here, but why not find a stock that is already above the 200-day where these moving averages are moving up? Yeah, Michael says he likes the 2 o'clock uptrending idea. It's just a way to kind of think about the concept of a smoothly rising trend. So here was another one and another one, but the real down, it was really in a downtrend. Does that make sense to everybody? All right. From what you've learned so far, do you already have a better understanding of moving averages? Just on a scale of 1 to 5, 5 being, yep, I know a little bit more than when I came into the webinar. 1 being, you haven't taught me anything yet, Eller. You better get going. Oh, I see a lot of 5s. Great. Mark is a 4. Joe and Roberta are 5s. Dennis is a 5. William 5. Bruce 5. Bob is a 4. But JS here, JS is a 6. So it's all balancing out. And David is a 7. So it's all balancing out. Getting a lot of people saying they're learning quite a bit already. So that's great. Thank you, Peter, as well. All right. So I just want to let you know I did receive this course. So we're relaunching the course September 1. What the nice thing about a relaunch is all the videos have been recorded and you have access to them as soon as you sign up for the course. And then we have live mastery classes where we really answer your questions and present new concepts and look at new trade ideas. So here's Bob K, who's already taken the course, and he just says, Stan, you were a very good teacher. Like your style, appreciate the simplicity of your explanations of the strategies. More impressed every day by the series of strategies and systems. So we don't just, teach you the basics about moving averages. We actually give you strategies and systems and clear explanations of how to use those moving averages. He says each one is very good, and in certain circumstances, I can see myself using most of these strategies and systems on the portfolio, depending on the portfolio that I'm working with. So that was a really nice testimonial, and we've had so many. We do a survey at the end of the course, and the comments were just overwhelmingly positive. So here's the EMA squeeze. It's already become a very popular strategy for VectorVest subscribers. We've taught it now a couple of times. Jerry does a great job. He's done a couple of special presentations on this, but of course we go into more detail in the Mastering Moving Average course. So we use the 5, the 8, and the 13 exponential moving averages because it is a swing trading strategy. So we want that faster, more reactive moving average. And after a pullback or a quiet period where the 3 moving averages have squeezed together, they start to pull apart and fan out, trending up and higher. And that is our trigger. And using the slope of those 3 moving averages after the squeeze, we can predict or at least anticipate if a significant trend change is underway and whether it's likely or not to continue. A strong upward move increases the probability of a successful trade. So we don't want the moving averages just to be kind of going sideways, even if the 5 is above the 8 and the 8 is above the 13. That's not good enough. We actually want a thrust to the upside. We want momentum to the upside, and I'll show you that in our slides and the graphs. Here are the buy rules, and remember what I said. A trader with buy rules is going to outperform a trader who doesn't have buy rules or who has rules but doesn't follow them. So I'm giving you some rules. We have the 5 EMA must be greater than the 8 EMA, and the 8 EMA must be greater than the 13 EMA. Price is going to be above the 50-day simple moving average. And mostly I trade this on daily charts, daily graphs. So I'm talking about daily here. So pretty simple rules and very clear when you look at the graphs. That's the main thing. We throw in one more rule that you'll see on the graphs as well, and that is that our relative timing indicator, the RT, is trending higher over a minimum 3-day period. The RT is a very smart indicator of trend and momentum and how dynamic is the momentum behind the move. So we'd like it to be moving up over at least a 3-day period. So that's just one more rule. And of course, as with most of our long strategies, we want the market to be in an uptrend. We can use the DEW, detrended price oscillator, envelopes, and a weighted moving average. That's the Goldilocks timing system in VectorVest, not too fast and not too slow. But you can be a green light buyer and come in a bit earlier as well. You just want to make sure the market is moving up. Okay. So here's the buy rules in a nutshell, and then the sell rule, the line in the sand. For prudent investors, the 5 EMA has closed below both the 8 EMA and the 13 EMA. If you haven't heeded any of the earlier warning signs, and I'll point them out to you in a minute, then you must take risk off the table and sell when the 5 closes below the 8 and the 13. That's the time to get out for sure. Again, we're using moving averages, so there's going to be some lag, which means you're going to be giving up some profit. Or if you start out in a losing position, you might lose a little bit more before you close the position. But at least you've got a rule for knowing when you have to get out. So here's what it looks like in these little mini graphs. This is what the squeeze looks like, the 3 moving averages. The 5, 8, and 13 have come together. They're compressing here. And, just like Bollinger Bands, when they squeeze together and compress, there's going to be a breakout either to the upside or the downside. We're looking to the upside. And here it is here. But we also want price to be above this 50-day moving average, which is the purple line. And here's our first candle where price is above the 50-day. And we also want these three moving averages to be pulling apart, spreading out. We're seeing some separation here, and that is there on this trigger candle. And the very next candle, we buy a position and open to the upside from there. Notice over at the right, I've added the RT, and so the RT is moving higher as well. So everything works together. We're above the 50-day. The 8 is above the 5 is above the 8 EMA. The 8 is above the 13 EMA, and we've got a high probability trade. This is a daily graph, Michael. Yeah, I'm just using daily graphs. Okay. This is a cherry picking strategy, Michael. So we haven't done sort of using our back tester, but this is going to deliver a fairly high win rate, and I'm talking about a 50 to 60% win rate or higher, because you're putting a lot of things on your side here. Now on the selling side, as you know, Jerry is a candlestick kind of guru or expert. And so in one of the mastery classes, he'll teach a little bit about candlesticks and what to look for in terms of warning signs. And we do a module or a lesson on candlesticks in the course as well. But there's some other warning signs. For example, when the RT is diverging away from price, in other words, price is going up and hitting a new high, but RT is falling and hitting a lower high, that's a divergence. That's an early warning. So if you've got a nice profit, you could sell half or take all of your profit off the table. There's another warning sign where there's a gap in the bands. You notice the 8 and the 13, there's a pretty wide gap there. Yes, we want that separation, but if it gets too far apart, that can be a warning sign of trouble ahead, especially when it gets quite far away from the 50-day moving average. It's going to pull back. All right, and then an easy one to spot is when the 5 EMA and the 8 EMA start squeezing together and the 5 EMA is falling. That's a real strong warning right there. And of course, the RT just kept hitting lower highs. So lots of warnings, and you could, sell early based on those warning signs. Sometimes you're going to leave some profit on the table. The stock is going to turn around and go right back up. But if you're comfortable taking a smaller gain or a smaller loss, then there's early warning signs that you can pay attention to. So here's that mini graph sort of blown up now. Here's that squeeze that we were looking at. There was our entry, and I really like this too, that the buy rating of VectorVest up at the top of the graph has actually just turned into a buy. So a fairly recent new buy. And we've got price above the 50-day moving average in purple. Our lines, our EMA lines are fanning out. RT is rising. We've got some big volume down below, close to the 50-day moving average here. And we go on a very nice run, about a 49% gain before we actually have the 5 EMA crossing below the other two EMAs. That's our sell signal. Now, this was a fairly tight sell signal. Sometimes you will see the slope of the 5 and 8 EMAs is much more pronounced to the downside, and you may give up more. This is an ideal sell situation right here. But even at that, it turned around and went back up a little bit. It's going to happen sometimes. But notice the RT. The RT actually started falling back here, hitting a lower high, even back here. So that was an early warning. This was an early warning, and it just kept going to the downside, showing that you needed to get out of that position. So here's the stock that I traded very early on in this strategy, and we had our squeeze, really a great squeeze. This one, the price was already above the 50-day moving average. We teach in the course with a couple of our strategies how much we really like it when price kind of hugs the moving average that I'll teach you in the course. It's hugging the 50-day in this case. Then we get a nice big green candle. RT is rising, big volume. And so our entry would be on the candle right after the big candle here, when we get a little bit of separation between our three moving averages. So that was at about $20 on July 13th, 2020. Notice we immediately started to pull back and the moving averages came closer together. So there was compression there, but they found support and rallied again to the upside. Now here was a bearish candle, and you could have taken early profits there. RT starting to fall. But if you waited for the 5 EMA to cross below the 8 and 13, you still had a nice 32% gain during that period. Here was the squeeze that happened below the 50-day moving average. And so we had to wait for price to get above the 50-day, which happened on this green candle right here, just barely crossed above the 50-day. The next day we had follow through with a higher high than this green candle. So we were able to buy in at $26.70. The bands were pulling apart. You could have waited a little bit, even to here, for the bands to get wider and then come in there. And then it went on its merry way. We had a little bit of a squeeze here, but the 5 never crossed below the 8 and 13. This was just an opportunity for a new investor to come in, or for a trader to add to their position. And off we went for another gain. All right, is anybody liking this so far? Anybody liking this? Just give me a Y if you think that this could work for you. Sunil says, yep, yes, yes. Bob says, yes. 5. Yes, definitely. Roberta says, yes, yes. Mark says, great refresher. So Mark has, seen this strategy before. Joe says, tried and proven to work. That's awesome, Joe. Appreciate that. Yeah, Michael V says it's a great review as well, having taken the course. Augusto, yes. Manual, yes. So, yeah, I know that this has become a favorite strategy for both Jerry and myself, and it's one that we use along with others that we teach in the course. You know, I always worry about giving people too many strategies, and at some point you have to decide which one works best for you. We give you about 7 different trading systems and strategies, and typically what I find is most students will find 1 or 2 that just really works for them and suits their trading style, and you get proficient at it before you move on to the next one. So here was another one, just a perfect squeeze above the 50 moving average. Big green candle on pretty good volume right at the 50-day moving average. And then this was your trigger, your alert, in other words, and this was your entry. And off you went on sleep number, which for quite a while had a really good run. We actually had a bit of a squeeze here where the 5 and the 8 moving averages came pretty close together, but the 5 never crossed below. But on this big red bearish engulfing candle, if you decided to take your profits here, that would have been quite fine, or at least sell half and then let the rest of your position run. You know, you've got to let some of your money run in these positions, because you need those occasional big winners, because you are going to have some losers or some situations where you don't make a lot of money and you just need some of those really big winners. And this strategy gives you that opportunity for the bigger gains and typically will get you out before a big loss. Mark is asking, who is the EMA squeeze most useful for? If I'm a retired investor, does this get me questioning initial trades more than I should? This is going to give you some really good entries, Mark, but I wouldn't be using it for exits for my retirement account. Think back to that graph where I showed you the 100-day and the 200-day moving averages, and I think you've got your answer. Okay. You can use one strategy for an entry and another strategy for the exit. Nothing wrong with that. This is going to give you great entries and get you off to a good, safe start quite often, most often, in fact. But you may want to hold positions longer. You've got a support area of the 50-day moving average, or you could use the 100-day as well. I don't often let a stock fall below the 100-day unless I've owned that stock for a long time and I'm getting great dividend yield out of my dividends. Yeah, Michael, I'm going to give you a search that limits your population. And of course, you mentioned the sector and industry groups, and you can always add that to your list of reference as well. All right. Joe says, when would one move to the weekly or some other time frame? Well, I would say on the weekly side, we have strategies that are more suited to the weekly graphs. This one is really a daily graph setup. You can definitely use it on intraday graphs as well. The Jockey Club with VectorVest, they like the 3 and 8 EMA moving average on their 2-minute graphs, for example. Well, not much difference between the 3 and 8 and the 5, 8, and 13. And so I'm certain you can use this for intraday. I don't use it that way. I use it for swing trading, not day trading. Okay. So here's just another example before we show you the search and some live graphs here. But here's another quiet period. So Kinross, many of you are from Canada. We have a lot of folks from the US and other countries as well. And glad to have you all here. But in Canada, we have a lot of gold stocks, a lot of miners. And so here's one, and it works really well with this strategy. Here's our quiet period or the squeeze. Then we get a big upside candle and another one. We're above the 50-day moving average now. We've got a DEW up signal right here with this green triangle. This is on the market, not on the stock. And we've got a buy rating up at the top of the graph as well. Notice we had some whipsaws in here, and this strategy would have kept us from buying on the new buys, even during the buy rating, because the 3 moving averages were not rising and they were not pulling apart. But here they were, and this thing went on a nice 33% run if you held it all the way until the 5 crossed below the 8 and the 13. There might have been some signals earlier on. Here's a bearish engulfing candle here. You could have possibly sold half your position there from a risk management point of view, but it delivered a good result. Here was another quiet period. There was our trigger candle right here, and there was our entry on big volume here. And we went off on another 26% run. Now, here was a big quiet period, and we had a big green candle. Here we see the 3 moving averages starting to pull apart. I wish I had a prize for the first person that can tell me, why didn't I buy this stock again right here? Big green candle, big volume, RT rising. Why didn't I buy this stock right here? Anybody? Yeah, Rick's got it. Yeah, Michael, that's a pretty good answer as well. Michael says not enough separation. Would like to see a bit more separation. But Rick D has the answer. It's the DEW down. Mark has it as well. This red triangle is the DEW down signal, and we're just not going to take a chance on even a buy rated stock that meets all the EMA squeeze rules in a down market. We'll just wait for the next up candle, and there'll be lots of opportunity. All right. So here, just one more. This was a top VST stock for quite a while. And if you were following this strategy, you had a chance to get in pretty early on it. We had our squeeze here. We had a nice green candle on high volume where the RT was rising. That was our trigger. And then we had a buy situation from there. This maybe looks like a sell, but it really wasn't. The 5 never crossed below the 8 and 13. So you could have stayed in or added to your position on this other squeeze. And then we had a big up day on big volume and more momentum with the RT. And then we went on another rally, another bit of a squeeze of the 5 and 8, but the 5 never crossed below the 13. So you're in the stock for a really good long run. That was a really big move. So lots of money to be made on that one. All right, so the setup. We know that the hardest and most time-consuming part of swing trading is to find the right stocks with the correct setup early in the trend change. In VectorVest, we make it easier with 3 ways. We've got the stock viewer. So very quickly, because the stocks are rank sorted by whatever we like, whether it's VST or RT or CI times the growth rate, the stock viewer can give you the best candidates very quickly and easily. The watch list viewer, probably my favorite method, is to go to the pre-built premium watch list, the S&P 100 or 500 on the US side. Gives you a great list of stocks. The NASDAQ 100, another great list. There's other lists in there as well. And then there's the Unisearch, a powerful search engine where you can actually pinpoint potential candidates for the right setup. So if we focus on the Unisearch, and I've given it to you here, and in a little bit, Jerry's going to put the slides in the handout section. So you'll have the slides and the recording, and you'll see that we've got the rules of the strategy set up in the search. We've got price split adjusted. The operator is Pro Trader. You do need the Pro Trader add-on premium module. But the good news is if you take the course, you're going to get VectorVest real-time US for 60 days after August 14th, and you'll get Pro Trader along with it. So you'll have Pro Trader for your countries, and you can set up this search. It does require these technical crossovers, so you do need Pro Trader. But the 5 EMA has crossed above the 8 in the past 5 days, and this is pretty cool. In VectorVest, we can say we want both averages moving up. Isn't that neat? And then we have the 8 crossing above the 13 in the past 5 days, both averages moving up. We're eliminating for this strategy the ETFs and the closed-end funds, the market. You can include ETFs or you can scan for just ETFs, whatever your preference. Here's where we have that relative timing higher today than it was 3 days ago. Price is greater than $1. Stock average volume in Canada, our minimum is 50,000 shares. You could change that to 100,000. You might get more robust stocks. US, obviously, it's going to be a higher minimum. And then this is important, the stock price, which is equivalent to the 1-day moving average, right? It's really the closing price of the previous day or the current day. So that's the 1-day moving average. So that has to be above the 50-day moving average. and it has been for the last 1 day. With these two moving averages, we give them 5 days because it's a cherry picking strategy and we want stocks where we can see that separation. So let's just quickly go and have a look at this. And we'll go to the US side on this one. All right, so I've got it open to the strategy. And I think somebody asked about what about when the green light, when the buy triggers? You could add the buy criteria to this strategy. I've actually done it here. I don't mind doing that from time to time. Just, the stock recommendation trending and the way I do it. Current day, I don't give a rating, but 2 days ago, it became a buy. And before that, it was not a buy. These closed end brackets mean it was not a buy. And day 4, 3 days before the current day, it was also not a buy. So you could definitely use that setup as well. This is what the operator looks like. It's just Pro Trader EMA. And you're going to love Pro Trader if you haven't seen it before. There's some 30 searches, ADX, stochastics, MACD, all those technical studies you can actually search on. But for this purpose, we are looking for the 5-day EMA crossing above, not below, but above the 8 EMA within the last 5 days, and both averages moving up. And if you're going shorting, you could go crossed below. Okay, everything is opposites in investing. So let's run this search. The market's closed, obviously, so we'll see what stocks. Oh, actually, I'm going to run the actual search without the buy ratings. This is the search, and these are the stocks that are coming up. So they meet all the rules for the EMA squeeze strategy. It even meets the rule for the DEW being up today. So even the market timing rule, you'll have to look at the color guard for that. And then you look at the graphs and then you cherry pick. And I've got it set to a 6-month graph. I like to look at 6 months to start, and I like to take price off. I just click in the price area, and now I can clearly see that I've got some separation. The moving averages are above the 50-day moving average, so I know that price is above the 50-day. And we're breaking out. Now there is a little bit of resistance overhead. You can clearly see that. So you might want to give it one more day. Let's see if price is above it. You know what? Price is almost above it, but not quite. So that's a good candidate. And I like to look back to the left. How well has this strategy done before with this stock? Well, this was an opportunity right in about there. We're above the 50-day moving average. We would have waited till there, triggered right there at about 1190, and we would have exited no later than 1394. We might have exited earlier because this is that parabolic move that we talked about earlier, right? Instead of going toward 2 o'clock, we're going toward 12 o'clock or 1 o'clock. So we know that's a parabolic move. And on this red candle, we could have gotten out. And instead of getting out at $14, we get out at 16. Does that make sense, everyone? Peter, that's a great question. Once you've got your graph set up, and I show you how to do this, I give you setups for all the graphs that we show for all the strategies in the course. But once you've got it set up the way you want it with the colors that you like, I use green, red, and blue for the moving averages. You just right click, change the style. It moves it off to my other screen. And then you choose your color. If you want a different color, you can choose it. If you're on a black screen, you'll want lighter colors, for example. And then once you've got it all set up, you come to graph layouts up here at the top, Peter and everyone. And then click on Save Modify Layouts right here. And then Add New Layout. and just type in 3 EMA squeeze. It won't allow me to do that right now because I've already got it, but um, if you give it a new name, you can save it. And then you can move back and forth, right? You can go to VectorVest layout, back to the EMA squeeze, or any of the other layouts that we give you in the course. Brian says, where will I find a link to watch this again? We send you the replay link, is my understanding, Brian. We make sure it's available to you. And Jerry has already put the slides into the handout section, so you've got the slides. All right, let's move on. Folks, when you see a setup at the right edge that you think would be a definite buy for you, I want you to type the letter B into the chat box. You don't have to put in a capital letter, but you can just type in a B when you see a setup that you think you would like to buy. And you can type in a B in the YouTube box as well. So let's just go ahead. And I'm going to take price off again. So is this a B? Sunil says B. Joe says B. Viren says B. Bob says B. Michael says B. Augusto says B. So the search is telling us this has met all the rules. Price is definitely above the 5 or 50-day moving average. We're starting to see some separation. We have a fairly recent new buy rating. RT is rising. I don't like the fact that volume is kind of going the wrong direction here. Oh, and Michael just pointed that out as well. So let's just see if there's a better one, but definitely this is a consideration. And some of you may be looking at the left edge and look at this setup before. I mean, was this a perfect setup or what? We even got big volume on this day. So from this setup, we went from about $50 to $64. That's a big move. And it was on a new buy. The other search that you can always use, folks, is the new buy rated stock search. It's going to give you some pretty good setups too. All right, let's go see if we can find a better one. Any B's for the group here? I can put the DEW marker on for market timing. Absolutely. That you have to have price on your graph, but we know that we're in a DEW up, right? We know we're in a DEW up. Okay. All right, I don't see too many B's for this one. Emmanuel, I've given you the rules for the exit and the early warning signs, so there's no typical length in the trade. I've been in trades, I was in Converge for weeks, but typically we're swing trading. You're looking to be in the trade, 4 to 10, 15 days typically. Yeah, and Michael says on this one, Michael V says I would wait for an extra day for the trigger, especially today we had a down day, right? And Joe says I would like a little more separation. That's probably the big one for me. There's no separation of our moving averages. Roberta would wait. All right, listen, I think we found our best candidate so far. Volume is increasing. RT is rising. We've got great separation. We got a new buy. I see lots of B's coming across the screen. Sherry likes it. It's a buy. Yeah, I think that's the one. But you see how easy it is when you have the Pro Trader. But you can look through the graphs in Stock Viewer or your watch list, and you're going to meet some good ones. Yeah, Mark says B. It satisfies all the criteria, meets all the rules. All right. Folks, I can tell you're liking this already. There's the rules again and the sell rule. So we've covered 5 ways to use moving averages. That's just a glimpse into what you're going to get in the Mastering Moving Averages course. It truly is the most comprehensive course that I've seen offered for mastering moving averages, for any moving average course, to be honest with you. We don't just give you a basic one setup. We give you several strategies, and we tell you which moving averages are used for what purposes. Okay, whether you're a long-term investor or swing trader, if you're looking for trend definition, just whatever the purpose is. So let me tell you about this. Again, it's a relaunch of the course. You get immediate access to all the trading modules right at the time of the purchase. Normally the cost is $5.95 US dollars for the course. It's just $2.95, and we've got a lot of bonuses. Again, if you're new to VectorVest, you're going to get the subscription to VectorVest for 60 full days. If you're a current subscriber, you're going to get VectorVest real time with Pro Trader. You're all going to get Pro Trader because we need it to do these technical searches that I'm showing you. So you're going to get a lot of information. And these are all the different modules. I'll show you them again later. You get 6 live mastery classes, plus a bonus class where we teach you a brand new strategy, a high-low moving average band strategy, never been taught in VectorVest before this course came along. So 6 live masteries beginning September 1st. They're at 2 o'clock Eastern on September 1st, and every week thereafter, every Wednesday thereafter. And they're all recorded and placed into your VectorVest University Thought Industries. Current subscribers, you get 60 days premium real time if you don't already have it. If you're not a subscriber now, you get free access for 60 days. It's like getting a 60-day trial to VectorVest for the cost of a course that you would love to have anyway. And then access includes Pro Trader for those technical searches. And we give you the Auto Timer Genius so you can do some back testing and portfolio management. Okay. Emmanuel says, can I pay tomorrow? I believe this price is going to be available tomorrow as well. So it's a short-term price offer, but I wouldn't wait too long. The link is vectorvest.com/MA. Takes you right to the course registration page, or you can call 1-888-658-7638. Mark says, if I haven't bought Pro Trader, is there something close that I can be used to set up a good technical search? I'm not really aware of anything, Mark. Pro Trader gives you, just tremendous searching capability. When I had the searches open, let me just show you here. Here is all the searches, and you're going to get access to this for 60 days with the course. So you'll know after 60 days if it's something that you like. Now, you can purchase Pro Trader as a one-time purchase for the lifetime that you own VectorVest, and it's typically $4.95 US dollars just for Pro Trader for a lifetime, but after the course, you can also purchase it for $395. This search, because we're using these technical studies, if you don't sign on to Pro Trader after the course, then you're going to lose this search until if you get Pro Trader, it'll be back in your software. Best way to put it, I guess. Yeah, so it's not long-term access, Mark. It's going to be 60 days to give it a real good test. Okay. All right. So this is what the course content is, 10 full lessons. We go through the VectorVest system to give everyone a good foundation for how to analyze stocks, the best stocks, depending on your investment style, and how to add moving averages to your graphs and the searches. Then we get right into understanding moving averages. And this, it looks so simple, trading with a single moving average. And I'll give you a little hint here. We use the 20-day moving average. And a lot of services, you'll pay money just to learn how to buy a stock when price moves above the 20-day and sell it when it falls below the 20-day moving average. Well, that's not the way we teach this moving average system. It's a complete system, including the money management and including the setup for the search. There's a time to enter the position based on what price is doing. when it crosses above that 20-day moving average. Trading with the golden crosses, moving averages as support and resistance. Which moving averages work well depending on your investment style for support and resistance. The EMA squeeze, we go into more detail for the long and the short. Multiple moving average, this is the guppy. And I've taught the guppy to our Financial Freedom Summit, and a lot of people told me they just loved it. So it's a big part of this course as well. Dr. Barbara Starr, an author and technical expert, I would say, head of the Technical Analysis Association in California, for example, a while ago. She comes in and actually does the videos for the surfing the reversal waves, a strategy using Bollinger Bands and a short-term moving average. Midas Touch, both long-term and swing. The Midas Touch system, as it was created for VectorVest, is a short-term trading strategy, but we love it when those moving averages first cross. We don't wait for a 3-month graph. And then our bonus trading system. So you're getting a lot. You're getting case studies and homework included with every lesson. This is what it looks like. When you click on the arrow, it tells you what's inside. There's homework in the case studies. And Jerry and myself are available. Of course, during the mastery classes, we answer your questions and kind of look at new situations. And a lot of folks email me with their homework, and that's fine. Rick, the access to Pro Trader will start, I believe, on the August 14th, which is the Saturday, is when you would have access to Pro Trader. We want you to have access all the way through the course, and the last day of the course with the Mastering Moving Averages and the bonus module is October 13th. So you get it for 60 days, so we give it to you to make sure you get it for 60 days. Okay. Folks, we'd love to have you with us. Rob O took the course and was very pleased with it, liked the presentation style that we use for the course. He really likes that 20 MA channel. That's the bonus strategy. He thinks the course should be a fundamental course for new and experienced VectorVest users, and I couldn't agree more. It gives everyone a great foundation, and he really likes it. And Warren did a lot of testing with his previous trades. And then he said, my win-loss ratio following my old plan resulted in 51% wins with very little monetary gains. If I would have used the 20-day moving average strategy, I would have had 75% winners and produced my largest portfolio gain. Using the EMA squeeze, I would have netted me 84% winners with the second largest portfolio gain. And the golden crossover strategy, it's not a basic crossover strategy. It would have resulted in 64% winning trades and the smallest of the 3 portfolio gains. I would gladly have taken half the portfolio gains in any of the 3 strategies. So some really great testimonials. If you're interested, sign up quickly because you'll make a quick decision. You'll benefit from the early bird pricing. Don't wait too long and all of a sudden the early bird pricing has gone away, and then it makes it harder to jump in and pay $5.95 when you could have got in for $2.95. So make a decision, and we'd love to have you with us. Stan.heller@vectorvest.ca if you have questions, and jerryd@vectorvest.com as well for questions. So it's been a real pleasure having you with us. Ron says, how long is each lesson video? He's on the YouTube chat. Typically, they're about 90 minutes, Ron. I think maybe 1 or 2 I might have gone slightly over on that on my sessions, but I think typically we were able to get them in sort of 60 to 90 minutes. But we take as long as it takes to give the full lesson with good examples and so on. Great question. All right. How many are in? How many are thinking about it? Viren says, is the course self-paced? Well, you get the course for an entire year. I hope you don't take a year. um, with these mastering moving averages, or sorry, the mastery classes, we do typically, we'll do the first 2 lessons in Mastery 1, and we'll do another 2 lessons in Mastery 2. I think 3 and 4 are just one. We cover one lesson, and we do them in order, in order that you see here. So we're not giving you more than you can handle at a time. Yeah, Michael, there is a Bollinger Band study in there as well. Like I said, this is very comprehensive. The Bollinger Band study is Dr. Barbara Starr's strategy, surfing the reversal waves. Yeah, Joe says, I took the course and it's well worth it. I've taken a number of courses in VectorVest and they're all very good. That's awesome. And Mark says, it's a great course. I go back to the videos for a refresher. Yeah, that's the beauty of it. You've got the videos for an entire year. So you can go back and, or maybe you mastered a strategy and you want to focus in on a second strategy. Well, you can go back to the videos and maybe decide on a second strategy. So yeah, Bruce says pretty much sold. And Mark says thinking about it. Looks appealing. I'm sure you wouldn't be disappointed. There is a money back guarantee if you're not completely satisfied. So we kind of take the risk away out of it as well. All right, well, folks, yeah, what Joe likes about everything in it is it keeps it simple and effective. Mark says you often use channels in your graphs. Is that something described in the course? We do talk about channels, support and resistance, and moving average channels. And the bonus strategy is a channel strategy using price highs and price lows. So something that we don't teach a lot in VectorVest. In fact, I think before the Mastering Moving Average course, we've never taught it, but it's becoming tremendously popular with professional traders using the highs and the lows for moving average channels. Very popular. All right. Any last minute questions? Yeah, Steve says, I think I'm going to sign up. We'd be glad to have you, Steve, over there on YouTube. And I know you'll enjoy it. And we love working with you. All right, so thanks everyone. Thanks to Jerry for answering questions in the background. And he did post those mastering moving average slides. I'll give you another quick second here to look in the handout section and just click on it and it'll open it up and you can save it to your computer. So if nothing else today, you've gotten tremendous amount of detail on the mastering or the EMA squeeze and a little bit of an understanding of some ways to use the moving averages. I hope that's going to be helpful to you. And for those of you on YouTube, the slides are right under the title description. There's a link there, a report link, and just click on it and you'll get the slides for the EMA squeeze and what we talked about today. Thanks everyone. Have a great rest of your day and a great long weekend. And most of all, stay safe out there. And we look forward to working with you. All the best.